Hey, everybody. Does it ever feel like trading earnings is like a crapshoot? The company can have really good earnings and the price can tank, or it can have bad earnings and the price can skyrocket. I already know. I'm going to share with you in this video 3 steps you can take to trade a stock after earnings as a seller. All right, let's get into the video. Because earnings is so unpredictable and the seller strategies usually don't go well with a lot of volatility, we'll need to look at a strategy that's going to allow us to capture this price action in a safe way. So let me take you to the charts to look at 2 different stocks that just had earnings, and I'll walk you through the steps we're going to take to determine what would be a good trade. The first stock I want us to look at is Shopify. Keep in mind that all of the earnings information and major volatility happens either after the market closes or before the market opens in the pre-market. During those periods of time, you cannot trade options. No matter what option you have on, or if you'd like to enter an option, you cannot. You can only work with shares at that time. So you really have to wait until the market opens before you can trade options. Right? So Shopify on this particular day had earnings. It fell and fell and fell. So it started off up here at $90. And by the time it got to market open, it was at $77. It's about a $13 drop in the pre-market based on earnings. Notice after earnings were reported, there was a little bit of an upswing, but then it fell back down and for the most part still ended just around the place that it entered or that it opened on the morning that we had options reporting just before that. This is a common occurrence. Sometimes it opens and it continues in the direction it was going, but there are more times than not, the market opens and the price stays somewhere nearby the place that it opened or where it has fallen to or risen to during the earnings call. What I suggest you do, you look to see what did the day do. So this is the day after or the day of earnings being reported. Let's watch the price action. That's my first step. Watch the price action for that day. Don't necessarily look to enter trades just yet. Watch the price action for that day. At the end of that day, change and go do your charting on the daily chart. Remember, theta decay is our friend when we're a seller. So we can get as close to expiration as possible without worry. There's no need to rush into a trade. Might as well wait to see what kind of price happens and let the stock settle down before you place your trade. Our second step, go to the daily time frame and do your charting for support and resistance there. In this case, the price of Shopify dropped right down into a support zone. Support zone is right at 76.58. Just above it is where it is. There's another support zone down at 71. But there's a humongous now, I don't call it humongous, but there's a big old gap between where it closed the one day and opened the next day for earnings. This gap is going to provide some resistance. As you go into this gap, there are sellers in here. There were sellers who had orders in here that didn't get to sell at the price they wanted. So there's sellers still waiting in here. Also, chart your any other zones that you see along the way. You're going to want to chart those as well. These are going to help you determine which strikes you should select when it comes time for you to place your trade. So now we've got, in this particular week, Shopify had earnings on a Tuesday morning. Expiration for this week is going to be on Friday. So there's 3 more days. Okay, so we see that this has come down to a support area. It would really be best to wait to see how does it respond to this support area. Does it hit the support area and reverse and start to go back up? Does it go through this support area down to the next one? You really want to, in this case, see one more candle. But we can look over at the trade on the option chain. We can look and use probability out of the money, which is going to give us some indication as to using our probability out of the money of what strikes are going to be good strikes if we decide we're going to place a put credit spread, or if we'd like to go look on the call credit spread side, we can utilize a probability out of the money of 75 or above. But we do want to wait until the market opens on the subsequent day to see how it's going to respond to this support area, and then make your decision then. Another stock I want to look at is Waste Management. Waste Management reported earnings in the pre-market also this same day, and it had a lot of upwards movement, and it opened about $12 higher than what it closed. Don't know if that's $12. $188 to $196. It opened about $8 higher than when it closed. As I mentioned before, during the day after the earnings report, the price didn't do a great deal of moving. It opened at $196 and it closed at $199, about $3. But that hard movement, like the $8 that was gained during the earnings call, wasn't realized or did not continue for the most part during the trading day. So remember, our step one was to watch the subsequent day or the same day of earnings to see what happens in the price action that day. Then we're going to change to the daily chart and go ahead and chart on the daily time frame. This was step two. In this case, Waste Management has been going up for a while. It's been on a nice uptrend, and this earnings call gave it another upwards move. There is not resistance up higher at this point. I went back looking, and there is no resistance here. So because we've been on an upwards trend, we would still most likely want to go with a put credit spread or something that's going upwards or that's going to take advantage of this upwards move. Just like on Shopify, it has now a nice little gap that is formed between these two. This is now called a buyer's gap because price jumped up and skipped over all these buyers. I guess there could be sellers in here too, but the price jumped up and skipped over all these people. So the bottom of this gap is going to provide some support. Step three is to wait one more day. Let's see how things shake out. Let's do our charting here on Waste Management. I see support right there. I see some more support at 185 and some change. There's another one down at 183. You see Waste Management has been going up. Support is going to be the bottom of the gap, which is 188.15. Current price closed at 199.49. Because this is a 52-week high, we do need to see what happens on the subsequent day. We do need to see what's going to happen. But let's move to the option chain. This is step three. Look at the option chain to see what will be a good strike for a put credit spread or a call credit spread, depending on which way things are going, to determine what would be a good trade. Looking for probability out of the money of greater than 75% will put us at the 195 strike. But this is something that you're going to want to wait and see what the next day holds to confirm that this is actually a good place for you to place your trade. So, hey, if you want to elevate your learning of credit spreads, I do have a resource, a training resource for vertical credit spreads. I'll put the link down in the description and you can grab that and be able to go a lot deeper into credit spreads and how they are going to help you to generate nice, consistent profits. All right, check the link in the description. So we looked at two stocks that just had earnings. And I gave you 3 steps you can use to enter a trade after earnings as a seller. Step 1 was to make sure that you look at the price action the day of or the day after earnings. Step 2 was to do your charting on the daily time frame. And step 3 was to pick your strikes based on probability out of the money and the support and resistance zones. All right, thanks for watching.